So sorry everyone for the late start. We have Duncan Davidson, who's the co-founder of Bullpen Capital, is stuck in San Francisco and probably in bad traffic by now. So he's going to arrive midstream. So we're going to leave this empty chair for him to slip in. But I'd like to welcome this panel. It's like rife with talent and information about the blockchain, something that I'm passionate about, and I gather you all are too, or you wouldn't be here tonight, missing the debate. Aren't we lucky? Okay, so I'm going to hand it over to Mark, and I'll get him to introduce himself, and then each person can introduce themselves and just say a little bit about, their reason for being here, their background, and then we'll open it up to Mark's going to actually moderate the panel. He's a Silicon Valley journalist with quite a few papers, and I'll let him take that over. Thank you.
Well, thank you. I'm happy to be here tonight. We've got a great panel for you, and I am Mark Albertson. I cover technology right now for Blasting News. I also write for CBS in San Francisco. I also have written on technology for many years for the San Francisco Examiner. Before we kick it off with the panel, let me just take a brief survey for our benefit of kind of the audience. Let me start by asking how many people here tonight own Bitcoin or have had transactions in it? Just raise your hand. Okay, I've got a few there. And how many tonight have been involved or connected in some way with a company that does transactions using the blockchain? More there, okay. And finally, let me just ask, how many here tonight are here primarily because you heard we have air conditioning? Anybody? There we go, yeah. I think we all raise our hand for that. All right, so let's go ahead and start. Aldo, why don't we start with you and have you begin by just telling us a little bit about your background.
Thank you very much. So my name is Aldo Carrascosa. I'm the CEO and founder of Align Commerce. So essentially, Align Commerce is a replacement for traditional outdated telegraphic transfer systems and wire systems. It is really created specifically for small and medium businesses. So we use the blockchain as a new settling trail. And I think we were, if not the first ever payment processor that did fiat to fiat over the blockchain, 2013, very, very early.
My name is Elise Colleen. I'm representing a venture firm called Stillmark. I have been in the blockchain space as an investor, as one of the earliest investors, focusing on infrastructure tech generally. So I've invested in companies like Blockstream and Blockchain.info. My draw to the space was really the engineering talent that was here, and then the innovation that was newly possible because of the technology. My background prior to blockchain was in investing in data, network infrastructure, and new marketplaces at one of the larger funds in LA. And prior to that, I have a background in the life sciences and worked as a researcher studying immunology.
Hello. Yeah, you're good. My name is Mason. I'm here as the token developer on the panel. I am with BitGo. We're a Bitcoin security firm that works with hedge funds, OTC trading desks, and exchanges. You can think of us as a security layer on top of Bitcoin that helps you securely move your funds very quickly. And I'm also the creator of Etherly, the first multi-signature Ethereum web wallet. And yeah, that's me.
So my name is Darko. I am an investment principal with Orange Silicon Valley. We are the Innovation Center for France Telecom, a French telco that's based primarily in France, but we have a network in over 29 countries. We took a very early interest in Bitcoin in late 2014, eventually resulting in us making a small investment in a company called Chain.
Excellent. Okay, so let's start with the real tough question here, and we only need really one of the panelists to take it, but you can all feel free to chime in. So just quickly give us your definition of the blockchain. What is it? We stumped the panel already, I see. Go ahead.
I guess I'll take a stab. To me, the blockchain is a immutable distributed ledger that anyone can access, and it can be used to either make transactions that are immutable or put information on the blockchain that you can access from anywhere in the world.
Excellent. Anyone else want to add to that, or that covers it for you? Alex?
Yes. So I've always seen the blockchain's 4 parts. The first one, of course, is the ledger. The other one, another part of it is called the token or the currency. The other part is the math behind it, or the science. And you can actually think of the math science as 2 different things, or the same thing depending on the use case. So essentially, the ledger is that thing that everyone shares. The math is the proof, and the token is the way to write. That's it.
All right, that sounds great. So let's kind of start with a broad question here. And I'll start by quoting John Wolpert, who's been the individual, some of you have probably heard of him, who's been leading IBM's blockchain projects in this area. And he's been quoted as saying that he views the blockchain as a lot more than a financial instrument. And his quote is, "It will transform the internet based on the concept of massively distributed trust." So is this IBM hype, or will the blockchain, in your view, indeed transform the internet?
So I think it allows for an emboldening of people that have access to the internet. So if the internet allows for communication and also allowed for the creation of new forms of marketplace and new forms of exchange, like e-commerce, for instance, you still had to have access to other tools in order to access those marketplaces and even simple e-commerce. So for instance, if I start a shoe company that sells shoes domestically and internationally, I can't sell everywhere because people have to have access to credit that my own banking system will accept in order to purchase the shoes. The blockchain takes away the need for access to those other tools through centralized institutions. And so instead of having someone say, yes, you can interact on the internet, the blockchain says you can interact on the internet per your choosing.
Go ahead, Alden.
Yeah, so something I really like about how IBM and John has really approached it is they're not seeing the blockchain as like a dichotomy. It's not like it's black and white. I like the fact that they're taking a very, very objective approach. It's not like something that's completely trustless or something that is single-party trust system. They're looking at it from a spectrum, I think, which is very important. I remember the days when we started when Bitcoin, and again, just to be clear, Align Commerce is not a Bitcoin company. We're actually a multi-rail company that allows, blockchain is one of our many rails, whether it be public, private, or hybrid. So I remember when it was, the whole conversation was ideological. I think we should be over that. I think we should go, looking at it from a more scalable point of view, where the blockchain, does address some very, very real-world applications. But I like what IBM, they put their name on it. So I think it's just, it's on us to see this through and to watch these systems mature.
So I'm kind of influenced by 2 books that I read. One was called The Collapse of Complex Societies by Joseph Tainter, and another one called The Fourth Turning by Neil Howe. And what that says to me is that throughout society, things seem to gravitate towards centralization and then decentralization. And so maybe we are, in certain instances, reaching the limits of centralization. And the second aspect of it is just our cultural acceptance of decentralization. And so you bring the 2 together, and the third aspect is some sort of enabling technology. And so through the internet and through high-speed networks, we're being able to facilitate very efficiently decentralized ways of doing things. And so it might even be kind of a generational or cultural theme that's kind of underlying this movement.
Mason, you have anything you want to add?
I do think that the public blockchains in general we're sort of dealing with it with a technology that we've never really had the opportunity to play with before. And it really changes the paradigm when you have a network that you can access frictionlessly without a third party and to interact with. And I think that a lot of the possibilities have not yet been built out yet because I don't think blockchains are still yet at a point where they are easily usable or easy to develop on. And so I do think that there will be very, very large change occurring in this space. I just think that there are probably several layers of abstraction that we're going to have to build out on top of this before we can build, use cases that can access, large audiences and large groups.
All right, so let's kind of bridge into now some of the applications for it, because there's been a lot of speculation in the press, in my industry certainly, about the adoption of the blockchain, beyond the banking world. Including things such as IoT transactions, the supply chain, the stock exchange, gaming. I even, at a conference I was covering not long ago, spoke to someone who was modeling a way you could sit in your car, in a car that you want to buy, and buy it on the spot, in the car, using a blockchain application that's accessible on the dashboard. So, what is your feeling about how the blockchain can be successfully applied outside of some of the more common aspects that we're seeing? What are you seeing out there?
Yeah, so I think, one of the most important things for the blockchain to really flourish is to stop seeing blockchain for what it is, start seeing it for what it can do. So always start with a problem. So there's always all these big problems up in the world. And once you've identified a problem, you identify a use case. Well, you should use a blockchain, and I'm about to say a very controversial thing, or a database, right? And it's a long. I'm not interested to argue with anyone about that. So one of the things that the blockchain really does well is proof of authenticity. I'm actually working with. Actually had a conversation with a startup that's. They're putting public keys behind works of art. So they're putting the Bitcoin public key. Essentially, it's also, they've put an equation where it's behind this specific angle of something, so you know that it's never going to be tampered with. They've committed that on the blockchain. And essentially, it proves that this specific piece of art is unaltered, and you can transfer ownership. That's an awesome use case, because that's immutable. That's when you want it to be immutable. The other one I really like, specifically for Line, is blockchain as a KYC service, as a compliance service, or as an identity service. So companies like Civic, companies like KYC Chain, they allow you to basically provide audit trail. Basically, where it's almost impossible for you to choose or to change the way you commit things online, and there's no way for you to make it back. So I'd like to have my identity, instead of having a social security number, have it on the blockchain, because it can't be reversed. So if you're also thinking about what Deloitte, PricewaterhouseCoopers are doing, right? They're doing immutable accounting and consulting. I think that's pretty cool. So other than that, I think they are much, much more.
Is the question about what drives adoption?
Well, what are some of the adoption cases that you're seeing? What are some of the more unusual ones, perhaps outside of the traditional ones that we've seen? We talk about cars, artwork. What else are you seeing out there?
So I'll give two examples. One, I think, was just cited by our previous speaker, and that identity is really interesting. There's globally, and especially in emerging markets, there's a lack of access to identity, or identity that can be shared for exchange or for recognition. And so I think the blockchain certainly provides an ability for people to gain identity and thus access to the system. There's a company called NetKey that I've worked with for several years, as they were an advisor to one of the investment firms that I worked with. And this company has been working on identity and also KYC and AML compliance issues for a while now. taking learnings from when they built infrastructure for the internet and applying it to the blockchain. Now, the second thing that's quite interesting is blockchain's use case for IoT, which was mentioned by our moderator, and that we see the emergence of smart cities and smart nations like Singapore and cities in China. The question, and so a smart city would mean that there's sensors deployed that are collecting data both in terms of population data and environmental data, et cetera. But what there's a lack of is the ability to trust that data, or to trust that data as it moves between municipalities and between government entities, et cetera. But to commit that data to a blockchain allows it to be useful not just to the person originally collecting the data, but to folks beyond that group. So as IoT as things that are connected begin to exchange data, record data, share it with our entities, the blockchain becomes absolutely critical.
So for a very long time, because Bitcoin is a currency, it's a form of money, a lot of people that were building on top of Bitcoin were thinking of use cases for Bitcoin as a sort of a financial instrument. So for a very long time, we would see entrepreneurs building, more exchanges, more financial instrumentation, more wallets, more infrastructure, and more of the same. And so 2015 was very quiet for me because I didn't see anything very new. Soon after, we started to see a lot of people from different industries getting into the space. So you would see entrepreneurs, I guess seasoned entrepreneurs getting more into the space, like Balaji from 21. And what I think would drive adoption very well is, if more entrepreneurs jumped into the space, entrepreneurs that were looking at Bitcoin from a different perspective, not necessarily as financial instrumentation, but more so as a tool that they can use to build new applications that were not possible before. So my special request for the blockchain industry is to get more seasoned entrepreneurs into the space.
I don't think I have anything to add beyond the use cases or alternate use cases that have already been mentioned.
Okay. So let's now bridge a little bit more into some of the more newsworthy aspects of the blockchain, because it seems like not a day goes by without something breaking in the news around the space. One of the more recent stories had to do with Accenture announcing a plan to edit the blockchain by allowing an administrator to rewrite transactions. Is this a good development or a bad omen?
They patented that.
That's right. That's right. Yeah, it's a patent.
So again, I think I'll start, put my pragmatist hat on. I think it depends again on the problem and on use case. If you go to the EU, there's a law that says the right to be forgotten. Actually, so we have in-house legal counsel in the US, and I asked them, what does that mean? Does that mean if someone asks to be removed from our system, we need to physically delete them? So he says, actually not. As per our KYC policies, we will redact information and we will store you under cold storage, so on and so forth. But I am, to my limited understanding of the EU market, I understand that they have the right to be forgotten, right? So if you commit something on the blockchain, I don't think that ever gets forgotten. So that's a very, very difficult, it's a conundrum actually. So if you do something Align is in 60 countries. We spend a lot of time in the Eurozone. What if someone says we want to be forgotten? So that basically spells disaster because there's no way for you to delete anything on the blockchain. Again, but the immutability is very important to show proof of payment for us. So I will again come to the use case and the problem. Interestingly enough, I don't know if you're all familiar with what happened to the DAO, the hack. The Ethereum core devs thinking of rolling back Ethereum, basically removing everything after the hack. So the question is, does this fundamentally change the DNA of the system? Right, so I think that's a philosophical question. They're very, very, I don't like to use very pointed or very extreme words like stupid, and I've read a bunch of these articles that have said that this is a stupid stance. Again, err on a side of practicality.
Comments on Accenture, what they're trying to do?
The use of private blockchains, I think, will be quite different from the use of public blockchains, and it wouldn't make sense for a public blockchain to have an edit feature beyond incorporating new information in a subsequent version of a document, say. But I do think that in the next, I don't know, what, 5 to 6, 7 years, we'll see use of private blockchains by institutions that when we jump ahead 20 years, will seem outdated. And it's the same as what we saw with the introduction of the internet, right? And how this was used by privately by institutions. We'll go through the same cycle.
So when news of the patent first came out, a lot of Bitcoiners and people in the Ethereum community were very angered, and the reaction was almost as if Accenture was going to enforce this patent on top of the Bitcoin blockchain. But I think from a business perspective, I think Accenture, they have customers that they serve, and their customers are probably requesting a blockchain product with these sorts of features, and so I think Accenture was very strategic and smart in patenting this feature because I'm like at the same time patenting this also gives them a lot of credibility, with these customers that are going to be paying them. So I think from Accenture's perspective, I think this was a good move. So I support them in going after the patent and perhaps using it in some marketing to generate business.
Yeah, so I'm in similar agreement. I think if you look at how private blockchains work and the fact that the constituents operate their own nodes anyhow, why not, if amongst the Green parties they decide to do this, provide a vehicle for doing it.
So Aldo, you mentioned the DAO, and maybe that's an opportunity to talk a little bit about security. Because there have been a lot of stories in the news this year about some vulnerabilities involving digital currencies and the blockchain. And in the case of the crowdsourced DAO fund who was using Ether, they had 50 million stolen in June, and Bitfinex lost 65 million to a cyber attack in August, which is a Hong Kong currency exchange. So, to the panel, do these recent events give you any concern that the blockchain may not be as secure as we hoped?
Yeah, I mean, taking a first stab at it, I think I'd like to separate, the underlying technology with implementation. Right, blockchain as a concept is sound. The implementation, I mean, perfect example, the DAO. There's no, essentially, someone was able to funnel tokens out of the main wallet into another wallet. What's interesting, which is the paradox of all, is they could have actually prevented it from maybe the 2 million mark, but the DAO needs consensus. So it was subject to its own policies. We couldn't, they couldn't stop it earlier. Again, if you're actually looking at the creators of the DAO called, I think it's Lockit, they weren't, and I quote, they weren't expecting to raise that much money. So, I mean, I don't think if I was clear, I am the technical founder of Align, so I actually code. When you're looking at it from an infrastructure point of view, and if once, these guys are saying that, or girls are basically saying that we weren't expecting to raise that much money, one could assume that they probably did not architect or code it so that it can be scalable for something worth tens of millions of dollars, $150 million. So again, blockchain as a concept is sound, but the implementations, right, are questionable. And of course, in the early days, if you actually see all of the breaches, whether it's code, whether it's scalability, whether it's structure, whether it's even governance, the people inside the organizations that are, have access to private keys, don't forget, this is money. These are people's lives. We're not making an app to make you, share stuff. This is about the transfer of funds, right? With Bitfinex, that's a different conversation. We have a person from BitGo here that can shed more light on that. But so far as I've seen it, Bitfinex issue is I've seen finger pointing. I don't know what happened exactly. I mean, there's nothing specific to it. So I'd love to hear what the
Mason, do you want to chime in on this?
Yeah, I can't comment on that particular situation.
But there's only a few of us here, and this is being live streamed, so it's just between us. And nothing you want to comment on that. Huh? How about? Go ahead.
I'd love to talk about the DAO though.
Okay.
Hear about that?
Sure.
So I think Ethereum is really it's a really beautiful technology, and there's a lot of very cool things that you can do with it. And what I really like about Ethereum is that they said here's a blockchain, but it's for making apps. It's not for moving money, and that really opened up a lot of developers' eyes and thinking about using the blockchain in a different light. And there's a lot of cool things that came out of that. In the audience, we have a man who flew a drone with a Ethereum smart contract, and it doesn't really get cooler than that. So the technology is very young. They didn't move very fast. It is very complex, and so anytime you're building anything new, especially when it holds money, you start small, because if you've ever built anything in your life, you know that it never works the first time. And so, with regards to the DAO hack, I think there could have been a little more prudence exercised there in the creation of the smart contract. If you think about it, we don't really have any smart contract experts in the world. There are no developers that have put out large-scale smart contracts out there and have had them scale to 10 million users or 100 million users. And so it's still a very young art, and I think that there's a long way to go before we can comfortably use smart contracts for amounts of that scale.
Eric?
So I'm not worried about the Bitfinex thing. I mean, back in 2012, there was a company called Knight Capital. It was a trading company in New York, and through a computer glitch, they lost $440 million, and that wasn't reversed. So that didn't undermine the trust of the capital market system, and I think it's pretty clear that the Bitcoin network itself hadn't been compromised. As for the DAO hack, I think it's an interesting question, because I think there was some verbiage in that the contract was in fact codified by the code, and so was it a hack or was it a feature? And in terms of outside of sort of the crypto world, you could take these things to court, and you would have justices kind of debate and argue over what that contract meant and whether or not it expressed the original intent. But here now you had a consensus vote kind of determining whether or not that was legitimate or not. And I think that's a philosophical thing that we should be exploring more.
I'd like to add something. No one's talking about what happened with Bitfinex. I think what it entails from a programmatic point of view is everyone is saying that it was keys of the multi-sig signatures were compromised. Now, I was one of the first people that's ever done P2SH. So it was, we did smart payments 3 years ago. It was one of the most important tenets of why we believe in the blockchain. And for me, it's very important for me to understand how it happened, because so P2SH essentially is you need 2 or 3 keys to sign a specific transaction for a transaction to actually go through. So it's statistically impossible to find 2 keys in 500 million keys. And they happen to be the key pairs of the specific transactions. So, for me, it's very important for me to know if P2SH is, or multisig is the problem, or is it the implementation of multisig? So I just wanted to say that.
Okay, we've been joined now by our 5th panelist, Duncan Davidson, who is apparently spent an hour of his life on 101 that he'll never get back. But Duncan, why don't we just take a short break here and have you just briefly introduce yourself and tell us about your involvement in blockchain technology.
Okay, very glad to be here. Sorry I'm a little bit late. Bullpen Capital, we do what we call post-seed. It's like an early A round. So we look for companies that are actually scaling and have some product market fit, which makes it very challenging to go into the blockchain or Bitcoin world because it's gone through the Gartner hype cycle and now we're in the trough of disillusionment. And these type of problems I just heard people talking about are indications of the trough. What we did do though, so we looked at a lot of Bitcoin blockchain stuff and decided not to go into it early because it was way overvalued from our point of view. But we made one interesting investment in an Internet of Things company which is using the blockchain for the thing. And they're building into the thing smart contracts. Now these are dumb smart contracts, but I think where we should all be starting. So for example, open door, closed door, these type of contracts. And it's called Filament, I don't know if anybody knows it, but they're using the blockchain. So years ago I was in a company called Intertrust, which is doing digital rights management. We try to create secure machine-to-machine communications as well as securing a PC, which is almost unsecurable. But we solved the problem. It was very intractable. How do you actually create a trusted fabric of things? So for example, if you're all things and you want to send a message from Mike over here all the way over to our panelist, and you hop through other things, how do you know that thing in the middle is trusted? You don't, unless you come up with a way to do it. So what they figured out was blockchain creates, in effect, a hash for the thing when it's first made. That's their MAC address, if you like. You guys will understand this. And to check whether it's a good or bad thing, you just check into a distributed hash table to see if it's a real or bad thing. That's sort of the starting point. And they began building on top of that secure messaging and now these secure contracts. And it's fun to watch because I had a board meeting a couple days ago and they actually were showing me the code of the secure contract working and they're all excited. I think it turned on a bunch of lights that said hello world. All right, I had to start somewhere. That's what we made involved in right now. We do watch the rest of the blockchain. I saw some remittance companies in the first wave of Bitcoin and some of them are now becoming fairly solid, so I'm now taking a second look at them to see if they can actually send remittances to the Philippines and save money and not have some of these hacking problems.
All right, well, with Duncan's arrival, we're well represented certainly in the investment side of this area. So let me ask an investment question and see what you all think. And this has to do with a study that Magister Advisors published last December, in which they said we're going to see the emergence of at least 5 Bitcoin and blockchain unicorns in 2016. Among the possibilities they had mentioned were Coinbase, Bitfury, and KNC Miner. So with one more quarter to go, is their prediction going to come true?
No. You want me to have one more to say? No.
And why?
Well, again, we're in the downward, the hype cycle's over and we're coming down the other way. So it's just a matter of how markets perceive this stuff. They were so overhyped and things got to such elevated valuations relative to reality. So now reality's setting in.
Go ahead.
I think a lot of the capital raised by some of the larger folks, or the folks that took in greater amounts of capital, was raised in a way that showed lack of, at least on the investor side, true understanding of what could be achieved given the technology that the companies are built upon. So when investing in a Bitcoin or blockchain startup, you're investing both in that startup and in another startup, right? Which is the Bitcoin blockchain or whatever rails it's built on. And both have to be in pace to achieve the metrics that justify that company's valuation, right? And so I think that some of the larger folks that raised rounds, they're now in a situation to attain or reach metrics that are not reachable given where the infrastructure they're built on is at. And so I think we're a bit early to see a unicorn emerge in the space, at least in the areas that you cited in the study.
Well, just to chime in, I think my conversation with Sanford Road, so it's lukewarm, absolutely lukewarm. Go to China, red hot in China, and I know that for a fact given my series of meetings. So it really depends on the region and the area. I mean, Southeast Asia, pretty hot. I mean, they see this as like with glistening eyes. I spend maybe half my time in Asia on these things, and of course you're talking about Bitcoin blockchain. When you look at the institutionals, everyone's getting into the game. no one's making any gigantic bets. IBM's maybe spent money on their infrastructure, but it depends on where and who's putting the money in.
Yeah, I think BitGo is going to be the first unicorn.
You heard it here first tonight, folks. There you go. Bitco is his company, yeah.
Does that mean by December 31st?
No comment.
Give or take a few months, we'll see. So one question that I wanted to ask the panel has to do with what we're seeing in terms of law enforcement making progress over the course of the past year in developing pretty sophisticated algorithms that can track criminals who use Bitcoin and the blockchain for things like ransomware and drug trafficking. I just actually wrote a story about this where criminals are apparently now moving toward more secure and private cryptocurrencies like Monero, which is in the darknet markets. So what does this trend mean as you get this confluence of law enforcement getting better, the bad guys now moving toward private currencies? Can you give us an assessment on the future growth of both Bitcoin and the blockchain, and given these dynamics that we're starting to see in this area?
I can take a stab at it. So from a platform point of view, so we're a payment service provider. Half our traffic is fraudsters and probably scammers and probably hackers. So I think it's by very nature of a human. If there is a vulnerability, someone will exploit it. Someone will find it. And coming from a guy that does code, regardless of the unit of exchange, whether it's the fixed system, whether it's it's a loophole in Yahoo's information retention and gathering program, someone somewhere will figure out something. So I think it's always a catch-up game. So I think it's up to companies like us to espouse really solid grade type of infrastructure development, governance policies, KYC, AML, and it's up to us to tell people that we're actually coming at it from a very mature point of view. So blockchain isn't the end all be all; it is an enabling technology, and we put an entire moat around it. So and basically this is how you communicate to the outside world that criminals can use the blockchain and Bitcoin, but we have an implementation of it that is foolproof. Well, almost. There's no such thing as a proof system.
I think you are always going to see this challenge, with governments and municipalities trying to catch up to people using technology to perform, illicit activities. I think there's just going to be a never-ending cycle where law enforcement is always going to try to, understand the technology, try to work within the framework, and technology always evolves. And so, the malicious folks that are trying to use technology to either steal people's money or to, I guess people that buy drugs aren't always malicious, but people that are buying drugs are always going to find a way to, make new technology to do it. And I think we're probably going to see this cycle just go on forever, with or without Bitcoin.
Go ahead.
I think criminals are motivated in terms of the moneyness aspect, the fungibility, durability, and some sort of intrinsic value preservation, and that happens to be the key attributes of why people value money so much. But they always find alternate ways of transferring value. I mean, Tide, for example, is one of the things that a lot of petty criminals traffic. When they can't move cash around, they move bottles of Tide. So they can find all sorts of things to go around. In fact, if anything, if they start adopting more Bitcoin, it would actually validate sort of the moneyness of the currency.
So you're asking a couple of public policy questions, at least two. One is, the systems themselves are going to get secure enough? But the second is, should law enforcement have a back door, some mechanism? So on the first one, the best thing that could possibly be happening is happening, which is this becomes very visible and it's hacked all the time. So we begin learning. I mean, I personally haven't used Yahoo in 10 years, but my password got hacked, right? It's like, who wants this? So the thing is, I think it's very good that these systems are getting pushed and shoved to get more and more secure. So this is a good thing, even though it seems like a bad thing. It's the application layer on top of the blockchain needs to get a lot more secure than it is. The second thing, though, is a public policy thing. This concept that two private parties with keys that are not identifying them can do transactions in the public is fantastic. The governments are the one that want to go after you and find out who they are. It's a policy question whether they really want the government to do that. It's the same question where Apple and Microsoft, et cetera, had to turn off their back doors for the NSA into their systems. Big human pride. But at some point, who do we trust more, the people or the government? So I actually think it's a bad thing that the governments keep on finding ways to get into this at too deep a level. I'd rather have a system which was both secure from the hackers and secure from the governments and worked in a proper way. But that's a policy question way above my level. I'm just talking from Silicon Valley point of view. I'd like the technology to give us that choice and not have the NSA hack through it all the time.
So there was an interesting use case that emerged on Twitter last week that integrated law enforcement activity with the blockchain that'll take us in a different direction, and that was in the IoT space. So if police have their body cams on, theoretically, that video can be committed and time-stamped to the blockchain so that we can actually monitor our public service providers in real time or historically by leveraging what Satoshi has given us. This is an idea from Scott Robinson from Plug and Play, so I won't claim it, but he said on Twitter this week or last week that if someone is working on this, that he'll support them and provide funding.
So I want to, that's a very important point. The World Bank put out a big study, I don't know if it's public yet, but they're trying to take data like Volkswagen's data on its diesel emissions, which obviously was a cheat and they got discovered, and get the data they're putting up to the world as correct into the blockchain. At least there's a secure example of this point in time, that file is what they gave us. And later we're going to find out they cheated. So you get this record where people can't go back and change the historical record and get away with something. So I think whether it's the police or whether it's Volkswagen or anything, it's a very valuable thing to do. And they're making progress to get this thing put in place, at least for the World Bank. Whether the actual hub of data is public, I don't know. But the concept that you talked about, the secure timestamp and the document or file or record is brilliant. So I hope somebody does fund that.
Well, let's, Duncan, you mentioned the regulatory aspect, and I think that's an important part of the discussion right now around blockchain, especially in areas like the EU, particularly because, while the blockchain is based on a globally accessible and distributed system, places like the EU are being very strong in saying, well, customer data has to stay inside a jurisdiction. It's got to stay inside a country's boundaries. So we're going to see more friction between companies and regulatory agencies as banks and other institutions globally adopt this technology. Where do you see that going?
Well, Europe's had forever these cross-border data flow type of restrictions. You could design the system where the transaction and the files are in the public global domain, but the actual instantiation you're pointing to sits in Europe. So there's a way to actually work with them to make this work. But I think your deeper question is like with ICANN apparently going to get thrown out to the wilderness. So the minute ICANN, this is the domain registration, gets thrown into some UN body, it's over with. Every little country will find a way to begin balkanizing with the internet. So the last thing I'd like to see is begin to balkanize the blockchain. So I think there's got to be some mechanism that gets rid of their nervousness about where the data is, but allows us to be a global public ledger.
I mean, I actually spend real face time with regulators in different parts of the world, so we're in 60 countries, so I actually have to meet with regulators from central banks. I mean, from a industry point of view, it's really up to us to walk them through the use case and the flows. Unfortunately, they don't speak geek. I've tried to talk geek to them, and then ultimately they see it box mugged. But if you actually talk the language, so it's very important for you to, for guys like me, guys, ladies and men from this panel, basically to talk to regulators and to educate them. So you can disintermediate, you can basically put abstraction layers. they don't understand what that is. And believe me, I've spoken to either state, federal, or countrywide, region-wide. It's very important to talk in their language and their terms, and we should educate them.
This reminded me of something you said earlier about how Asia has shown there's been like a more excited response, at least from investors in China and in Southeast Asia. And I think that on the regulatory side, this is true as well, because emerging innovation hubs see an opportunity to compete. So Silicon Valley and the US are slow to adopt, to form regulation that makes sense for the blockchain. Singapore will not be slow, for instance, and they also speak geek there, by the way, the regulators. And other developing innovation hubs will have an opportunity to really compete, and they're pushing hard to do it by being smarter on the regulatory side.
Derek or Mason, anything you want to add to that? Okay, we've been talking about banks a bit tonight, and there was some recent news from the Bank of England that despite ongoing pressure to speed up financial transactions, that they have declared they're not going to be migrating any of their services to the blockchain in the near future. And this could have some significance given that Britain will soon be leaving the EU and be, in some places, rewriting their own financial standards. Is this a big deal?
So I think that's actually a smart move, and here's what's going to happen with every financial company that's going to consider a private blockchain for their uses. So they're going to want to get exposure to technology to get in the space, and so they're going to invest in it. They're going to build out a solution. And the thing about blockchain technology is that it is very hard to maintain. And so instead of getting the cost savings they're expecting to realize from moving to the blockchain, now they're going to have this huge bloated blockchain department. And 5 to 10 years down the road, they're going to realize, oh, we could have just made a slightly sophisticated database, kept the same team, still downsized, and gone that route. So I think they're probably smart for sitting this out and waiting to see what happens within the realm of blockchains in financial institutions.
Okay, Aldo?
Yeah, I think it's definitely a very important path forward. Like even in the Central Bank of England even considered the blockchain. So that's a very important thing, regardless of whether or not they choose to implement it or not. But unless I missed the report, I don't think they give enough details on why they chose not to do it. Is it because of the level of blockchain sophistication? So this is just the applications, the different platforms out there. Second, is it because of their understanding of the blockchain? Or maybe they're so late into the development of the RTGS that implementing or using the blockchain to power it would retool everything. So we don't know. So did you hear about?
No, but she may have a comment on that.
Yeah, I'm from Sydney, and Sydney's blockchain crazy at the moment because we have really, really strong banks and they're investing loads of money in it. So I know that there was an R3 conglomerate of banks around the world and like blockchain, and then they realized that all of the data had to be public, and as competitors, that their data is their power, and they don't want that to happen. So that may be why.
No,
Go ahead.
It's use case, public, hybrid, private. And I don't know if we're going to get into this right now, but I think that whole argument is pointless.
Go ahead, Duncan, and then we'll bridge
I
it.
want to pick up on Australia. So the RBA, Royal Bank, is the Royal Bank, right, of Australia. The central bank is looking into the use of the blockchain. And they have different interests than the banks. So they're not all the same interests. So a lot of the interest of maybe the Fed or the European Central Bank, if they want to do this, is actually something I wouldn't be very happy about, which is their negative interest rates are trying to force cash out of people's hands. They're trying to get rid of cash. They think people are hoarding cash. And so they're trying to force people to spend the money. So their use of the blockchain is not what we all think, an efficiency and a public ledger. No, it's so they can get control of money. And they can track the money and force people to do stuff they don't want to do with it. So whether this is where it ends up, I don't know. But I just think the R3 people and the RBA, or the Australian equivalent of the R3, have different interests. And I suspect that maybe the RBA experiments with the blockchain, but until the Fed does something, nobody's going to do anything. And I think given the current Fed, that's a long ways off.
Totally agree with that sentiment. I mean, Ken Rogoff, who was former chief economist of the IMF, wrote a book called The Curse of Cash, which I think all of you should actually read. And among terrorism and criminals, he talks about the limits of monetary policy. And so there was another economist, Greg Mankiw, that talked about money that expires. So the whole idea is that every year you have a lotto, and between 0 and 9 you pick a number, and all the bills that end in a particular number disappear. They become worthless. And so you instantly have 10% inflation. So if you can kind of codify this in a private blockchain type of thing with some smart contracts, you could see a very efficient manifestation of these types of implementations by central bankers.
This is, by the way, insane. I mean, Ken Rogoff's book is insane. This is insanity. I have my Vegas money here, $100 bills. He wants to take them away. No, look, the whole thing about the blockchain and the Bitcoin being able to allow private, as I said earlier, I support that. These central banks they can go into your wallet and take your money out. It's insane. But they are thinking this way. So you can put two and two together what I think of these central bankers of the world right now. But I do believe that the private blockchain Bitcoin movement, if it gets the level of applications like DAO, they fix it so they don't get hacked all the time, can actually force the hands of the central banks. If we can push ahead of them, they're going to end up being in the public blockchain, not in a private chain, which is where I think this thing needs to end up.
Well, that's probably a good opportunity then to talk about one of the burning debates in this area, which is about private versus public. Because many people in professional finance are becoming more outspoken about saying they would like to see private or permission blockchains, but yet there's a whole constituency that's pushing back on that because of the public nature of the model. So, from the panel, where do you stand on this debate? What do you think? Although you had a cannon shot there about this debate, what's your take? And we'll open it up from there.
And this is coming from many years of Align started with the public Bitcoin blockchain. We had no choice back in the day, and actually it took us. We started this company almost 3 years ago, and I don't know if you attempted to do this back then, but it took us over 6 to 9 months to get a bank account. So it was that difficult that time. Now, I think the whole conversation is pointless. The reason why it's pointless, again, it's ideological rather than problem-oriented. So, permission blockchains have their use case. Public blockchains have their use case. So, will a JP Morgan ever use the public blockchain to do real-time settlement and to replace the back end? I don't think that makes sense. I think that's putting a square peg where a round hole fit. So I think instead of looking at it ideologically, and we've been saying this for many years, people should start taking a look at real-world problems, identifying real use cases, and determining 3 things. Should I use a database, regular flavor database? To your point, you were mentioning, right? Or should I go with the blockchain? Now, the question is, should I go public, private, or hybrid? Again, should be dictated by the problem and the use case. This, it's a pragmatic approach, right? Because it's not one size fits all. The blockchain is a very, everyone was talking about application layers on top of the blockchain. That's it. There are different applications you can write.
Oh, come on, go ahead.
I'll comment. The best analogy I can think of is the Bitcoin public blockchain is internet, HTML. The other things are Prodigy, CompuServe, and AOL. I guess you remember all these things? You know the analogy. I think economically we heard a great argument why the general solution is going to crush the private ones who may never even get going very far. So far, how many private non-Bitcoin currencies are going anywhere? Ripple spent a lot of money, and they're changing their business model. So I just think the history of technology says the public version is going to win. There may be private instantiations or variants on top. I agree with that. That's why being practical is the right way to look at it. But if I'm betting in this filament company, and they're betting the same way, they're just going to go with the HTML. They're not going to be balkanized away from the public system.
Some of the secondary layer solutions will allow you to privately use and keep your data safe on the public blockchain. I think the public blockchain will just, what I suspect or what I hypothesize we'll find is that it'll be much more efficient. And so as private intranets became the public internet, we'll see the same in the space as people want to capture the efficiencies. Enterprises want to capture the efficiencies of the public system.
I'll just copy and paste my earlier comment here, yeah, I'll leave it there.
All right, so we talked a little bit about China tonight, and when Bitcoin was first introduced, it was kind of positioned as an egalitarian way that average citizens could mine their own coins using computers and so on. The Washington Post, not very long ago, reported that mines run by Chinese companies currently account for 70% of the world's Bitcoin processing power. So should we be concerned about one country's domination of the mining space, and could this have an impact on the blockchain in the years ahead?
There was a lot of concern about the consolidation of, over 50% of the hashing power in China. I think that's really just everyone's inner Donald Trump speaking. I have met a lot of the people in the Chinese, Bitcoin and Ethereum communities, and deep down they all feel the same way that we feel about Bitcoin. And there's really no more than that, and they just really care about technology and really love being involved in the space.
I think aside from the, apart from the concentration of mining power, is the amount of power it consumes. Like by 2020, they project that the Bitcoin blockchain will consume as much as Denmark. So that is absolutely horrendous. That's even unacceptable. So I don't know if you guys know what ASICs do. They do nothing but mine Bitcoin. Now, unless I have been outdated with my knowledge of Ethereum mining, but I did mine Bitcoin a long time ago, and Litecoin and Ethereum. Ethereum is, correct me if I'm wrong, ASICs. It's impenetrable, but it can be mined by ASICs? It can't, right?
It can't. It's harder. It's impossible to. People use GPUs right now.
So, which is what I like about Ethereum, because it allows everyone to participate. Now with ASICs, I don't know if you heard about Butterfly Labs. They had things that looked like GPUs that did nothing else but mine Bitcoin. But it was a monster. It was a monster miner by that time. So Ethereum, on the other hand, basically prevents the arms race. Supposed to basically it will be NVIDIA. The number of people that can get their hands on NVIDIA GPUs, but. I think someone needs to figure out this whole power consumption thing. It's, I find it's a threat to just the environment.
I hope I'm not being naive about China, but I'm actually amazed, and I applaud the entrepreneurial fervor. It's amazing to watch. I think the structural issues of more than half of the mining is done by one consortium, and that we've been through this. They have undue power, and they can behave properly or improperly. I find that more of a threat than a country owning a big chunk of it. There may be a risk the country goes rogue on the world. I don't know if China will. I mean, put it differently, right now, where's most of the world's internet data? Here, Google, etc. We here are not worried about Google going rogue. The Chinese may be. So again, I could be naive. Maybe the Chinese will turn on the world. I don't think so. It's having the consortium have too much control, and the democracy of the blockchain gets controlled by somebody. That's a bigger worry. And so far, it hasn't been a problem.
So can I ask a question
Yes, go ahead.
about governance then? Because I think that is the biggest question around Ethereum and around Bitcoin. What are your thoughts on that? And because the whole idea of Ethereum is not to have people governance, the code rules, and it's better than people, and we have found that that's not right. I know we kind of touched it with Ethereum, but I think that's a really big question for me. maybe Pen.
Okay, panel, but Mason, go ahead.
So just so I can understand the question a little better, it's revolving around the immutability of...
So my question is really, I think we're at a time where we need to rethink governance. The government institutions aren't working as well as they used to, and blockchain gives us this big opportunity to rethink how governance is working. But in the experience of, say, Ethereum, the fact that we didn't have real proper governance and real proper legal institutions or frameworks, and believing in the idealism of it all. And then when it went wrong, it was a big issue and everyone didn't know how to handle it. So what is the answer, and what can we think of to manage and build governance for this?
I think it's really interesting because you have the two polar opposites in governance structure, like looking at Bitcoin and looking at Ethereum. In Ethereum, the leaders and founders and creators of the blockchain are very visible and very public and very involved in the community. With Bitcoin, the creator of Bitcoin is nowhere to be found, so it's in Bitcoin, at least, you do have like a group of core devs that are humbled, number one, by not being Satoshi, and number two, they were able to get some bugs out like early on. So it's good to have some governance.
But they weren't chosen by a group. There was no democratic kind of choice in that, and that's what you were pointing out about this group owning it. It's kind of like they just stumbled into being the ones that made decisions around how Bitcoin is driven.
Yeah, I mean,
this is how open source has worked for many years. I mean, this is Linux. I mean, Linux is the prototype of these models. So I don't think it's a fair assessment on that issue of governance, because again, we're seeing very successful models operating the same exact way.
Well, I must just say, again, I don't want to be overly political despite the debate tonight and all that, but it just strikes me that the whole vision Satoshi, or the group of Satoshi, whatever created it, had was a distributed system, and it wouldn't rely upon governance. And to some extent, the miners can vote by choosing one place, another place to put their mining power. So again, my worry is if there's a consortium of miners that gets too strong, they become effectively governance. But otherwise, I think the system was reasonably well designed from the beginning. And so Ethereum trying to replace the blockchain, bad idea. Ethereum being a layer on top of it, good idea. And that fight is still going on.
But to a certain degree, doesn't that get resolved by what you're talking about the abstraction layers and the applications that are going to come in later on? Because everybody's going to take their flavor of Ethereum and run it the way they want to, which is going to be a higher quality product in the end for the end user, which to a degree is self-governing.
Yeah, I have a lot of thoughts here. Yeah, so we do have like 2 Ethereums now because of the DAO hack, and one is purely decentralized, not really governed by certain leaders. Ethereum still has very strong governance structure there. I do share your sentiment that there will be many Ethereums down the line because of different events that will occur. So I think it's going to be really interesting to follow, and it's an unsolved problem really, and so who knows what will happen.
I think the problem of Bitcoin, blockchain, public, hybrid is never technological, it's ideological. It's when people, it's unfortunately still governed by people. You need to update the code. Unless you've got artificial intelligence updating the code based on a consensus model, you will have the core devs being able to decide. One of the panelists basically mentioned that there are 2 public Ethereum blockchains. The core devs of Ethereum wanted to reverse all the transactions from that hack. So it's again a fundamental. It's not even it's a it's a philosophical question. But
let me just throw something out. So a lot of these people started, like Satoshi, or I think I know who maybe, I'm going to get consensus view guy who it is, but a lot of these people look at the gold standard and they want to create gold as a people's money, not government money. And that still sort of pervades some of the thinking. If you look at the gold standard, you find out it was an emergent property of capitalism. It just emerged. It wasn't imposed. It was later sort of perfected by the Dutch, and then the English took it. And they ran it really well for a while. But it wasn't as if somebody top down said, "Shall we're going to do it, and this is the governance structure, and that's how we run it." And when the powers that be tried to govern it, with Bretton Woods in 1944 trying to create this new gold standard, it didn't last very long. Nixon went off it finally. So I'm actually a big believer that things that emerge out of sort of practical use are much more powerful than people trying to impose it top down. And if this thing's not done yet, so if we prematurely impose governance, we'll probably get a much worse system than we would have gotten if we let it evolve and emerge into something very powerful.
I'd love to synthesize two comments here, Gold and Linux. Essentially, Linux as an open source project didn't move value. It was a great OS, and then Gold was physical. It's finite and physical. This is, problems happen when you start mixing both. When you have an open source project that you're able to actually transfer and withdraw value from anywhere in the world. And this is uncharted human experiment right now, right? Because Gold, Linux, you just combine the two and everyone's going to try to figure out what to do with it. And I highly agree that imposing, some type of control governance over it will just stifle it.
Okay, good comments on that. Before we move to questions from the audience, there's one more area I just wanted to address for the panel and get their thoughts on. And this has to do with the cloud and potential migrations of the blockchain into the cloud. As we all know, it seems like every enterprise is moving as quickly as they can to get their data into the cloud. A company called Storage Labs is now using blockchains to create a decentralized cloud storage network. And one of the reasons for that is they're claiming it's more secure. Synchron recently announced 6 blockchain apps that are available in the cloud. So for the panel, what do you see as the potential for the blockchain and cloud-based applications right now? Where do you see that going?
Oh boy. We do see some deals come in that try to put those pieces together, and they're very hard to parse. Again, they're not yet realized in the real world, so it sounds great, but how's it going to? But the ones I've seen that work, I'll go back to the early comment you made, and also the thing about the World Bank, is you create a hub or a cloud system that's got private data in it, but the data gets put in there with a secure record in the public blockchain, so you always can point back to the canonical version. And the canonical version may not be available to the outside world, but the hash of it is now stored in the blockchain, and people later can figure out if somebody tried to change it or corrupt it. For a lot of uses, that would be extremely valuable, even for the banks. They could know that the original is this one, and somebody tried to change it downstream inappropriately. And that's a useful thing to do, even if the original version is not itself ever public. And I think that'll be a lot of people experimenting with that. The World Bank's doing it. A lot of people should have figured this out by now.
Go ahead, Mason.
Yeah, so as far as decentralized like data stores like storage and IPFS, I think this is some of the coolest technology in the space, but I don't understand it, so I don't want to talk too much about it. But it's going to be really interesting to see what actual applications come out of this, because it is still highly theoretical. It still hasn't scaled, so we haven't figured out all the problems. And yeah, I'm really excited about the space, but yeah, I don't know too much about the details.
Microsoft Azure allows you to do blockchain as a service. So I think one of the more important things that's really concrete right now is that. I think the early days of Chain, they allowed you to create blockchain, Bitcoin blockchain applications early on, and I forget the other company that has it. BlockCypher, thank you. BlockCypher. So I think now is the time to do experiments, and Azure actually has a very, very good blockchain as a service platform.
Other comments? Anything on the cloud that you want to add?
Outside of the US, there's some regulatory complexities that are specific to this space. So I think that has to be considered when looking at how it can scale.
Okay, we've covered a lot of ground here tonight, and I want to give the audience an opportunity to ask some questions. Just before I do, though, there's one that I have to ask, and I've been sitting here next to Aldo, And I don't know how many of you can see this, but he has 2 Fitbits and a watch. And one Fitbit I can understand. Can you give us a sense of why 2 and just extra fitness involved in that?
I'm testing a series of apps.
Very good. All right. Anything you want to divulge tonight?
No.
Okay.
No, but looking at the accuracy of just tracking. All
right. Excellent. There's another Silicon Valley startup in the works here. I can hear that already. All right. So for the audience, questions. What would you like to ask the panel about some of the areas that we've covered? We've plowed a lot of ground tonight on the blockchain, but I'm sure there's some out there that you'd like to know about, and we've got a good panel. So should we give him a mic?
No, it's fine.
Is it okay? Okay. Yes, in the blue.
So great panel, great discussion. I've been thinking about identity a lot in the context of blockchain, and I keep stumbling upon, suppose you were to build an identity system for IoT, or even for people, like Facebook is a big identity system sitting in a database. On the blockchain, it appears it's just not that scalable to handle that many transactions. So all these, projections that people are seeing, they must be thinking of a concept that you're saying, Joe.
I've got to jump in. The filament idea is every single thing, and there could be 1 trillion things. What are there? There are 10 billion of these. There could be 1 trillion things. The number is mind-boggling. Gets a secure hash from the blockchain. But the actual lookup of that to confirm you really are legitimate is not done on the blockchain, it's like DNS. So you can create a system where you have a secure, you should have private keys anyway. You can have a system where you have a secure identity that can be used electronically, but the actual uses would only rarely go back up to the blockchain.
But then don't you agree that all the properties claimed like immutability then depend on the, then rely on that additional infrastructure being robust?
That's right. That app layer better be damn secure. Right. It better be secure and it better work very quickly. Yes, that's right.
So are people working with Azure or AWS for relying on that, or what are they? What is Filament using?
Well, they're using a type of DNS. The DNS is great. I mean, if you guys know this, just to give you an analogy, in the old days of the phone system, to actually provision a phone number and look it up in the mobile system when you roam, it's really expensive. DNS comes along, it's pretty cheap. They found a way to use the same DNS idea to make it extremely cheap without using the blockchain. The blockchain just creates the trusted hash, and then you look it up.
Let me marry like the data engineering plus sidechains. I think you can do a tremendous amount of things off-chain. You can batch. Don't even attempt to do anything real-time on a sidechain. And you can store hundreds of millions of data points. I think Bitcoin blockchain, 7 TBS, correct?
Yeah.
7 TBS. Ethereum?
11
TBS. This Visa?
Pretty low, 200,000.
Right. So if you're looking at performance, you can't expect to get real-time commitments on any blockchain at this point. So you would probably do a data engineering type of implementation, and you probably have to commit something off-chain, like with a sidechain.
No, I agree with that. I just want to give an example. It's not that I'm an expert on the blockchain, but I'm watching what Filament's doing. For example, let's say you wanted a smart key, and your smartphone was your smart key. You do a blockchain transaction to get the right to go into this Airbnb for 14 days or something. The actual lock can be disconnected, and it just have a mechanism to read your permission, maybe by Bluetooth. At the end of the days, it turns off. So the contract, which is I get to go inside this lock and the door opens for 14 days, is done on the blockchain. But the actual use never goes back up there, just you. And if you wanted to create an audit trail, I guess you could, but that doesn't strike me as a useful use of the blockchain. You follow me?
Yeah.
And I'm just giving a very simple example. There's probably greater examples than that. But when I saw that and realized you create, in effect, a blocklet, a little tiny transactional thing that didn't require the whole mechanism to work and the miners to mine, I went, wow, you can think of a lot of uses of this with 1 trillion things and not crush the whole system.
Okay, other questions? Yes.
By the way, are you talking about tokenization?
In a way.
Okay, thank you. My question is for Mason. Right at the beginning, when you were quoting my colleague John Wolpert, saying that it would change the internet, and by the way, IBM's blockchain as a service on Bluemix is far, far better than Azure, but that's another point. Mason, you said it's not easy to build on. What does it need to make it easier to build on? With all these use cases we're talking about, the third world you were mentioning and so on.
So at a very low level, it's just very crusty to deal with because you're dealing with the protocol at the end of the day, and for it to be used by a standard user who shouldn't be seeing the technology, there are several layers of abstraction that need to go on top of it. So with any blockchain, if you want to build a solution on a blockchain, you're going to have to build, you're going to have the actual the core implementation of it. And then you're going to have transaction builders to actually build the transactions, and then you're going to need an API on top of that. And so there's several layers that need to exist for you to make a scalable application on the blockchain. So there needs. This is true with Ethereum too. So Ethereum, you can build cool apps on it, but there's no infrastructure there yet to make it scale. So Ethereum right now needs infrastructure companies that can allow you to build scalable applications on top of Ethereum. This is just the nature of working with the blockchain, and companies like BitGo, for example. When I first looked at the BitGo API, I was really excited because instead of having to construct a transaction, sign it, and send it to the network, now I could just tell BitGo to send Bitcoin from this wallet, and it was 3 lines of code, and it was the easiest transaction I had ever sent. Infrastructure needs to exist to make it usable.
By infrastructure, do you mean a platform specific for blockchain and IPFS and that kind of thing, or what are you talking about? What are you referring to in general?
So it can be different for every use case. So for Bitcoin specifically, if you want to build a Bitcoin application, you're going to have users on your platform. They're going to be transacting with Bitcoin with each other, with other people, and so every user on your platform is going to need a Bitcoin wallet now. It can help if there's an API you can use to make it very easy to transfer Bitcoin. So it's things like that that make it easy to integrate the technology into your applications.
So sector-specific platforms, kind of almost.
Yes, yeah.
Okay.
Yes, in the back.
When we're talking about the many use cases, the thing I've been most challenged with is R3CEV, for example. They've gone through over 150 financial application use cases and have been able to deploy none. They've moved into creating a blockchain without the blocks, what they call distributed ledger technology, which is this CUDA, Court, that's it. So my concern is that we've seen this, and we talked about this hype cycle issue. We've seen the hype cycle around financial services. We're seeing it now in healthcare and insurance, but we've yet to see a case in which the answer to the question, do I need a blockchain, isn't, can I do it with a database? In the public worlds, we're seeing very different characteristics. The use cases are different, the reasons are different. But I'm really hard struck by the lack of private blockchain use cases. And the Bank of England's decision, for example, they're not naive. There was a very deep discussion around what they were trying to accomplish, and they weren't able to do it with that. So R3CV, 150 use cases. Healthcare now talking about, consumers can control their information, what gets seen, what doesn't get seen. Again, these are not characteristics of a blockchain. This is an application thing. The blockchain is this technology. So I think Aldo mentioned the issue about use cases. Again, I've yet to see a use case that withstands the scrutiny of private blockchains. Has anybody seen it differently?
I have to quote one of our lead investors, Adam Draper. He said the reason why there's so much fire with all these FIs is they don't want to be Napstered. That's the main term. They don't want to be Napstered. And hopefully it's not a checkbox, some EVP. But they just want to make sure that they've looked at the blockchain comprehensively so that they realize what may be coming. So if you're looking at every single week, correct me if I'm wrong, there's this new either PricewaterhouseCoopers or a new bank in Australia will announce a working group or an incubator.
It's almost every other day.
Right?
Yeah.
So I think all of these, I'm not going to call it hype. There's a lot of experimentation going on. I think they're being prudent. Right? I think it's they've got billions of dollars in their war chest. It just makes sense to do it. But to your point, Pierre, they have to do it right, and they have to take it out of the experimentation phase into much larger scale type of projects.
I really like what you said, and I think that is a byproduct of not enough good entrepreneurs in the space, thinking of actually novel use cases. But also what you just said made me realize, perhaps we need to see, a Gartner hype cycle in every one of these industries, healthcare, insurance, real estate, within the context of the blockchain, and see those mature as we watch this go by.
So a couple comments. First of all, you're right. Secondly, a lot of people thought that this would come out like a fully formed battleship. You can do a multi-party letter of intent transaction through China, Singapore, New York, and London. No, it doesn't work that way. I like to see it start simple and build up. But there are some cases they really should be working on, and they're basically, think about the public angle. Having the timestamp, this really occurred, it's canonical document, canonical data. All right, you file a mortgage, you file a UCC1, you file these in county offices, they gather dust. Somebody's got to walk in and manually look at it. How stupid is this, right? You can see use cases like that where the filing gets registered. Now, it's funny that Adam Draper worried about NAFTA. He was probably 12 when it came out, but I guess it's still in good. But, right? But there are cases where you can see that it would be nice to have certain things in a canonical version that don't get stolen. I mean, a lot of us probably know the guy that lost sex.com as a domain and to sue and get it back, right? I won't go too deep there. But it would have been nice if his original canonical ownership was public and couldn't just be taken away by some letter somebody wrote, right?
Wait, it was. That's a bad example.
No, I'm saying it didn't work because we didn't have a blockchain. But imagine we had the public side of it was a record, and then that thing should not have happened. Do you get my point? I think that's where it might start rather than a purely private transaction. And it might start with more simple things like open door for a week as opposed to a complicated multi-party transaction, blah, blah, blah.
But Duncan, I think the examples you gave in particular were all public blockchain examples, and I have no issue with that. So the public side of it, I completely get it. And I think what you're talking about is very much of a walk before you run.
Absolutely, build it up from the bottom.
Perfect.
Yes,
I'm an advisor of a company in that space, so I'm very excited about that.
Yeah.
But having said that, as it relates to the private world, it's I hear the rhetoric of everything that the public blockchains are good for being translated as though it's going to happen in private worlds. And I'm like, there's an ecosystem problem here.
Here's a second comment. One of my favorite companies is Twilio. Everybody knows Twilio. When you look at the history of it, they took the complexity of the phone system and made it 5 API calls. How cool is that? And it was a mind-blowing thing when they came up with it. And I'm glad it went public. So imagine, in fact, I don't want to encourage too many deals to come into me, but imagine somebody could take a big chunk of blockchain transactions and create 5 API calls. And you were talking a bit about that, but if you could do that, you're vastly simplifying complexity underneath the surface. Bam, it's easy. Now, it's probably not mature enough to do that, but I'm waiting for that deal to walk in the door.
Yeah, please check out bitgo.com/API.
They're $1 billion. I can't afford a unicorn. I'll check out it. Be happy to, actually.
Yes, in the red.
My question's around micropayments and the impact that's going to have on industries, because it's kind of following on your question. Really exciting for us in Australia. We've got 1.3 million solar panels in our roofs waiting for the batteries to come in from Tesla. And we're community-wise, it's really hard to manage the staying on the grid and when the lights go out. So looking at using the blockchain and being able to share reserve power that people have and selling it in micropayments. So if it's 10 cents or 15 cents, everyone works in the grid in the community. And so that's something that's being explored at the moment. But other really interesting ones are around music and content, which have obviously so many intermediaries at the moment taking all the profit away. So I guess from you guys, is there examples that I haven't heard of that I can take back to Sydney?
Boy, I've been taking a lot of time. I could throw one out, but let's let somebody else talk first.
Last year I published a book chapter on this space actually, which was how there's a confluence between sharing economy and blockchain technology where it meets at the IoT. So I think that, I think this is not meant to be settled at the blockchain layer unless it's patched together. I think that this is something that requires a secondary layer solution because of the micro payment nature, but I think you can share uncommon resources through microtransactions, so sharing electricity, storage that was referenced earlier and things like this, which allows, and data, so that devices can share data, become smarter through each other. And this is something I'm looking forward to seeing and looking for as a micropayments solution, though I don't think the blockchain was, is meant to be the primary settlement layer there.
So as far as micropayments, yours .network is a they're basically making a social network or like a blogging platform enabled by micropayments. I hope I said that correctly. And there's micropayments infrastructure coming for Bitcoin in the form of the Lightning Network. Let's see, there was one.
For Ethereum too.
There's one for Ethereum called the Raiden
No,
Network.
the Lightning Network will also support Ethereum.
Oh, really?
That is a point.
Really?
Yeah.
Okay. I didn't know that. There's one company doing micropayments for torrent seeding. So get paid to seed your files. If you have higher quality files, people will pay you more. What is the name of this company? Does anyone else remember it? The logo is the elephant spraying water on itself. Okay, I hope their founder doesn't see this. They're using micropayments to enable that sort of a relationship with torrenters and people that are downloading files. So there's a lot of cool stuff happening in the space.
And ChangeTip was one of the first to do micropayments, right, through social media and messaging, which was tipping for just smart thoughts or for encouragement.
I'll give you, here's one. A lot of vending machines in the world, Coke and all that. And it's actually economically difficult for the person to take the cans off the truck, go downstairs to the bottom and find out they have the wrong cans. It costs a lot of money. Coke's been trying for 20 years to communicate the vending machines back to the network. Haven't found an economic solution. Here's an idea that's been floating around using the blockchain. So let's say Coke talks to an access point and it gets back to the network. Now, if you put inside the access point a very simple smart contract, Pepsi could use the same access point. If Coke put them up initially, the smart contract would say, okay, if you send packets through here, you owe Coke, 2 Satoshis or some small amount of money. That is a real example. It isn't very hard to implement once you get the base and the BitGo API calls going and all that. But what happened is you suddenly would have a network begin to emerge, put in place by one party that's shared by everybody. And it wouldn't ever be run by a cell tower. There's no cellular, and if you get the idea, no Tesla, no Optus, so no Telstra, sorry. So I think that type of thing will emerge before we see these cooperative sharing economy things. You could take the same idea into smart metering and do the same thing, where you can actually share your bits to somebody else down the street instead of having to go through the utility, and use this simple contract, smart contract. No human being's got to be involved. Once you create the contract, if you want to send it to that person, the transaction happens in the background.
Is this another idea you want to fund?
Yes.
Amazing. I just remembered the name of that company, if you guys will allow me to redeem myself. It's called JoyStream, and JoyStream.
JoyStream.
And the founder is Badejo, and he's a really, really smart engineer.
Yes.
I did hear something about an interesting point in the issues around scaling Bitcoin, so taking this as a Bitcoin problem. There are so many commercial applications that are looking to use something like the Bitcoin public network, that if the scaling issue was resolved, it would be unlikely that these consumer micropayment transactions would take up that slot, because the value for transactions is much higher to commercial applications than it would be for somebody to move 5 pennies and get charged 2, right? So a 2-cent transaction or 5-cent transaction would work great in an application that is hundreds of thousands of dollars of things happening versus a consumer application that's really nominal value.
Yeah, in other words, less incentive on the consumer space.
And again, this is all tied to the constraints around the Bitcoin scaling. So
I think you're begging a question. I agree with what you said in general, but how does that thing get started? So it may very well be the consumer applications start scaling and the bigger stuff comes on top. Because the consumer stuff is less risky if it gets busted. Not a lot of money's getting lost. So
well,
it's
this
just
is why the Lightning Network seems like a really interesting
Yeah.
solution for that problem, as opposed to going on-chain. So in the Lightning Network, you really don't have to be on-chain to do any of these things.
One thing that I haven't seen any, I've seen few Bitcoin companies do is, so everyone tries to start from like the ideal, like decentralized product, and then they try to sell that to people. Not many people use Bitcoin, so no one really cares, and so the companies don't really gain good traction or adoption. One thing I haven't seen until recently is a company building their product, perhaps not directly on top of Bitcoin, perhaps not saying there's Bitcoin, but scaling the product and then moving to Bitcoin, infrastructure. That's something that's possible to do that no one is really doing, and it becomes a lot easier when you do it that way. You don't have to, build very complicated tech and then try to scale that. So I think Purse is one of these companies. They built a really cool product that people like, and they've scaled it. They're generating revenue, and they are they're plugging in more sophisticated technology into the product. And so this is going to be the first case study that we see of a company, doing such a thing.
So you mentioned, that reminds me of something you mentioned earlier. So I'll say I started seeing companies like this in 2015 where it was entrepreneurs that were really smart entrepreneurs, which was your earlier reference. And the reason why they were so smart was actually that they weren't trying to build a blockchain or Bitcoin company. They just saw that the technology allowed them to create some other value and some other, what they would define, different ecosystems. So at the beginning of 2015, I started to see companies come and say, this is our value proposition. This is what we're doing in the music space, in this consumer space, in enterprise tech. And I would think, this isn't possible unless they're using blockchain technology, but they didn't mention it, and their name wasn't Bit whatever. Sorry, I shouldn't. Bitco should be named Bitco, but probably everybody else doesn't need to have a bit in the name, and these companies didn't. And then to see that the way they got to this value proposition was through the blockchain was just a total revelation, and I thought an indication of the sophistication of the entrepreneurial network. Because unless you're building infrastructure, you don't need to start from a Bitcoin perspective. You just need to understand what Bitcoin can, or blockchain can bring to your value prop.
I mean, just to that point, actually we spend a lot of time with partnerships. So Align, we've got a huge partnership team, and 75% of our conversations are how can the blockchain help us. So these are traditional, much larger companies that were, of course, never even thought about how to use the blockchain. So I don't know if they need us just so that they can pick our brains. But most of them, they're real genuine interest in understanding how the blockchain can augment their existing business offerings. And I think it's just grown tremendously in the past couple of months.
Yes, in the front.
Yeah, I think Bitcoin itself should not have any value. I really think it should be valueless.
So what are we doing here?
No, because you got to pay the miners.
So hold on.
If you don't pay the miners, they don't earn Bitcoin, then you got to pay them a fee. So do you want them to get paid for free?
In other words, it shouldn't be, say, $600. It should be a small amount to pay for the miners. But I think this is a bubble right now. It's like the paper on a $100 bill. Should it have any value? I don't think so. I mean, you have to pay the printer, of course, and pay for the paper.
But if there's some point at which if Bitcoin drops to too low a value, the miners can't afford to keep improving their technology and mine. I don't know what that is, but they'll turn on fees. I don't want to pay their fees.
But to follow that
More fun when it's free.
doesn't that limit the set of applications you can build? Because as an app developer, I have to think about the economics of, for each Bitcoin transaction, how much we have to pay the miners. If it's too high, I cannot. It's not interesting to me to build the application.
The Bitcoin also, so Adam Back talks about this, and you should look at the video. It's beautiful what he says, is that Bitcoin, and I'm totally subscribed to this view, is the security layer to the blockchain. And so the value of Bitcoin actually secures the blockchain. The price going up has the power to secure a growing blockchain. So with the price being zero, the blockchain is actually meaningless.
Well, it has to have some value, but not.
And then the other question I would.
Not $800 or
Who decides?
Well, the value will go up as more people use the network, but actually, I think another way to ask yourself this question is, and this is a bit controversial, but should a share of Apple have value? So if we're saying that the paper isn't worth anything, right? Like a currency paper isn't worth anything, there's another way to look at what Bitcoin is, right? And I would think of it, I would ask the question, should a share of Apple stock or should a share of IBM have value?
Yeah, I mean, if you actually look at intrinsic versus implied value, I think it's a longer, model of economic conversation. But, my personal, I own Bitcoin and a bunch of other cryptocurrencies. So I think Bitcoin is the best example of, a scalable blockchain use case. But it'll eventually evolve in such a way that it becomes less of a currency, more of a tokenization method, that you are able to claim ownership over an entry on the ledger. Now, whether or not, again, what is the value for being able to write something that can never be changed? This is a much deeper conversation. So right now it's speculative. That's the problem. And you've got analysts who have pricing history. You've got techno.
See, the way you're thinking is that blockchain is dependent on Bitcoin. I think it's the other way around. Bitcoin is an application of blockchain. I can think of a million different cryptocurrencies that would do the exact function of a Bitcoin in a different.
I think they are, to this point, right, interdependent. Like certain applications, certain use cases do not require all four things I mentioned earlier. Some of them don't require if it's a permission blockchain, then you don't really need the proof of work.
I just think that also the IoT things with blockchain needs a 5G implementation if you want to completely realize IoT on blockchain.
Or use LoRa, the radio LoRa. You don't need to use 5G. It's cheaper to use LoRa.
Use 2G as long as they don't tear the towers down.
That's true. We have one question. That'll be our final one for the night.
So, for those of you that have been in internet infrastructure for over 20 years, we have this wave of peer-to-peer. Do you consider the blockchain infrastructure kind of that next wave of peer-to-peer? It's a lot of kind of the foundation. I mean, the ledger didn't exist really in peer-to-peer, but you consider it kind of that next wave that we had 20 years ago.
Peer-to-peer, what do you think?
Well, I wouldn't frame it that way. As I said earlier, I think it's more like HTML. Not that it's a perfect analogy. It's much more common. It's like you have a free if Bitcoin has value, it's a free computing resource in the sky, so to speak. It's an amazing thing.
Well, it's
distributed. It doesn't have to be peer-to-peer, but it is distributed as opposed to centralized, which is a great value to it. And I wouldn't want to lose that value.
So Satoshi starts in the first 2 or 3 sentences of the white paper, it's referred to as a peer-to-peer network. So perhaps a peer-to-peer network, the development or extension of it is to have a distributed network, which I think is certainly more important than the peer-to-peer nature. But I think what keeps the community strong in the Bitcoin space is to refer back to what Satoshi intended, which I think the core devs do a great job of consistently doing, and that vision is peer-to-peer.
All right, and that's probably a good segue into our final takeout here. The panel knew this was coming. We're going to close tonight by making viral history on the live stream. Each panelist is going to tell us the true identity of Satoshi Nakamoto. Aldo, go ahead. You're first.
I have no idea.
He's Australian.
What are we going to do with it?
Well, I think it's not one person. It's probably a group of people.
Okay, Elise?
I'm trying to decide whether I should make a joke or pass on the question. I thought that we agreed at the last panel that it was Tim Draper, no?
Okay, well, that'll get the Twitterverse going. Go ahead, Mason.
Well, we know Satoshi by his name is Japanese, and so the past few, I think the past few people that have come forward have been incorrect. The guy from Newsweek was not Satoshi, but he's supposed to be Japanese, isn't he?
Allegedly, yes. Derek?
Why do we care?
Okay, and Duncan?
I go with what I think is a prevailing name, Nick Szabo. And Nick started BitGold, and it was a 1999 cryptocurrency based upon solving cryptographic puzzles. And he invented the smart contract. And his writing is quite similar to Satoshi's writing. Now, it may have been a collaboration in the end, but I think Nick was the prime driver, and still is.
All right, there you go. You heard it here tonight. Come on, your last words.
I just wanted to thank all of the panelists. I've actually so enjoyed this. It's been interesting and entertaining, and I really appreciate all you contributing tonight. And I'd also like to thank you all for coming and making that effort. I know it's long days for all of us. We get up at the crack of dawn and work all day, so it's great to see you all. And I also wanted to thank Oric, who have provided the venue, and also First Republic Bank actually sponsored your sushi and bottled water tonight. So a big hand for everyone. Thank you.